Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets snap a 3-day losing streak. The Nifty trades near the 10,200 mark. Finance Minister Arun Jaitley hints at the possibility of the government missing the fiscal deficit target in this financial year. Reliance Communications lenders are left with tough choices after its share price falls below the conversion price of 24.71 rupees per share. Suzlon trades with losses after falling as much as 7% post suspension of operations at one of its blade-making unit.
Well, that's not all. There are a bunch of other names which are moving around, and we'll talk about all of those. Thanks so much for tuning in to Countdown right here on Bloomberg Quint. 10,190. It's a strong move. The Sensex is up about 250 or 270 odd points. So it's an even better move for the Sensex as well. It's not really come off a bit. I think it's doing rather well. The Sensex and the broader markets too packing in a punch. Remember, there was carnage yesterday at the broader end of the spectrum. 1:4 in favor of the declines. In today's session, it's quite the reverse really. They are mirroring the large caps, cent for cent, point for point. Let's bring up the heat map and show you a fair bit of green, and I think that's been the case from the start of the trading day, and it stayed that way, which is actually a very important thing. The quantum of green on the screen hasn't gone down. The components have. Infosys has a really strong 3.5% up move. I remember it was a buy call given in the morning by Chandan Taparia amongst others, and that stock has done very well. 3.5% up for that one. Reliance Industries is participating, and IT by and large, it's not just Infosys. I think TCS, if you can see on the screen here, TCS is not doing all that poorly, so that is doing okay. HCL Tech is up about 0.5%. So there are select names within the IT basket which are doing well. And when you have a Reliance, State Bank of India, and Infosys participating in a big way, you probably believe that there will be some more gains. You don't need participation from stocks like ITC, L&T, and a few others. So it's good going all round. By and large, stocks gaining, not too many losers. And the turnover, I'll just get the turnover up on the screen. Compared to yesterday, I think the same time this time around, the turnover is much, much high. So we're moving up today on fairly decent turnover compared to last time. But keep in mind that there's the weekly expiry for the Bank Nifty that could be playing a part as well. But Pradeep, what about the broader end of the spectrum?
Well, the story is no different, and it's early Friday for liquor stocks actually, with Redico Khaitan leading. So that is the first stock I'm tracking today, up 13-14%. Also Saregama, this stock has been buzzing for a few sessions now, is a gainer up 13% today as well. Automotive Excel, among some other stocks that traders are trying to pick up today, is up 9.5%. You have Zuari Agro, also because of a news flow. The stock has gained today. And among IT stocks, as Neeraj just mentioned, if you look at in mid-cap space, you have First Source Solution, which is doing quite well, up 8% when I checked it last, is up 7.5% still. And also, you have Graphite and HEG that was stuck at lower circuit yesterday. Today, in fact, Graphite has moved up by 3.5%. HEG, when I checked last, was still trading in negative, but much better than yesterday, trying to recover. So some buying has come in here as well. One segment which has not really benefited by the improved mood in markets today is ADAG Group. Look at Reliance Capital and also Reliance Defense. These are two stocks from this group that I've been tracking. Reliance Capital is still down 2%, and even Reliance Defense, when I checked it last, was down around 5% or so. Let's see what has happened now. It's still down 6.5%. So that's the scenario here, Navneet.
That's about the broader markets. And finally, some respite. We're seeing green on our screens today. Let's also take a look as to what's happening on the futures and options side. Well, clearly, volatility may have cooled off, and last when I checked during the intraday session, India VIX was down as much as 8%, but I guess that's once again off day's low. Nifty, however, is trading very closer to its day's high, and now India VIX is off day's low, down only about 3%. It's once again inching very closer to the mark of 14. Well, overall, if you go by the options activity today, the 10,200 put strike has seen good amount of OI addition. Almost over 9 lakh shares have been added, so that's a positive sign. And not only 10,200, even the 10,100 put strike has seen open interest addition. The other positive sign is that there has been some bit of unwinding that one has seen for the out of the money call strikes, which were adding open interest. So for the likes of 10,300 or even the 10,400 call strikes are seeing a bit of unwinding. Even in the intraday session, there has been intraday unwinding of the 10,200 strikes. So if you go by the premium on these strikes, the near term range for Nifty is between the 10,120 to almost levels of 10,300. Remember, Nifty got its support from the 50-day moving average. We did breach that, but there was a bit of buying which came on those lower levels. And Bank Nifty obviously is in focus. The weekly options expiry there, the expiry is likely to be in that range of 25,200 to about 25,500 on the upside. Just want to mention two stock futures here, stocks which have hit their fresh 52-week high. One of them is Page Industries. It's gone up on high volumes on the cash side, but also on the future side, open interest is up 33%. Just a word of caution, the futures of Page Industries have been trading at a discount, and currently also the discount is almost 370 rupees. And the other stock is Volta's, significant amount of OI addition. Look at that, 44% higher, but even this stock has been trading with a discount of almost 1 rupee. But again, on the cash side, Voltas too has seen good amount of activity, so it's gone up on high volumes today.
Well, on that note, let's get in market voice. Ajay Bagga, Executive Chairman at OPC Asset Solutions, joins us right now on the show. Good having you, Ajay. Thanks so much for joining in. A bit of a respite, if I can use that term, for equity markets by and large, and for Indian markets as well. You reckon the near-term pain is done and over with, or is that very difficult to say that right now?
Yeah, Neeraj, I would say that investors have been much more resilient than the kind of news flow that we are seeing. So the market has done extremely well this year, if you see. And if it ends around these levels by December end, I would take it any day. I think it's been a good outperformance for this asset class. Having said that, what has fundamentally changed? Valuations have been high through the year. Buy on dip strategy has worked. What surprised me was a lot of news flow by analysts saying that it's become a sell on rise kind of a market. I really don't agree with it. I think market still has legs both globally as well as in India. The liquidity stays quite solid. The global macro growth remains extremely good, right from Japan to US to Europe. We saw a minor dip based on the Chinese numbers day before, but that was expected by the market post the Congress. The Congress was managed, the numbers were managed, and then they would let go a bit for a month or two, and that got discounted very fast, Neeraj. So I would say the global macro, global liquidity still gives some legs to this market. I don't think we are anywhere near the end of this bull market. We'll never know concurrently that this was the top, but there are no symptoms that normally come with the kind of euphoria that you see in the bull market. Maybe on the primary market side, there is some amount of trouble with a lot of the recent issues trading below the issuance price. That's healthy, that's very good, and that is not something that happens in a raging bull market. That is just showing there was a lot of mispricing and demand supply, and easy finance led to a lot of people coming in and trying to encash on listing gains, and that kind of easy money has got arbitraged out. That's how I would read it.
And also a large number of QIPs, Mr. Bagga, that some of the experts mentioned on our channel so far. But to answer the question that you just raised, what has fundamentally changed? And I'll just quote some of the experts we have heard over the last few days. You know, earnings haven't still improved in India, while bond yields are back to 7%, and crude has gone to 65, which probably indicates, you know, no further rate cuts, but maybe we'll get into a rate hike cycle if commodity prices remain where they are or they move up further. So that is the real worry, which is a big fundamental change, so to say.
Yeah, absolutely. And if you see, you know, 1 rupee difference in the oil price means about 13,000 rupees of the government's collection. So will they absorb it? Will they make the oil marketing companies absorb it? It's very difficult to pass on much more of the oil price hike. But Pradeep, the main thing is it discounted in the market? So I would say, you know, the premises we are functioning on right now, that A, there will be a slippage in the fisc. They won't be able to meet the fiscal, but market has discounted maybe a 30 basis point differential in the fiscal slippage. The second big part is oil is probably peaking. From now on, if it goes up further, the government will have to move in and give some excise cuts, which leads to a higher fiscal deficit again, or they have to make the oil marketing companies take it, or some hit on to the oil producers. We'll have to see what happens. Third is on the rates. I think now the 7% is quite grim. And bond markets are always much more accurate than equity markets. Mr. Bond is king always. So that what it's showing is that the people are expecting higher prices going ahead. I think that is very much. But RBI rate hike right now, even if there is a rate hike, there's so much liquidity, and the way RBI has been buying dollars, it is also leading to a lot more liquidity. So even if there is a rate hike, directionally problematic, but I don't think that would have that big a trouble for the market. So it is a complacent market, but it is not a euphoric market. That's how I would characterize it, and that's what does not give me a look that I should short this market. I think today we saw beginning of the day, we saw the PCRs at 0.8. And we were seeing that it's a very oversold market. We have seen some amount of a bounce back. Now, whether that continues, what are the next legs for this market, that we have to wait and see.
Mr. Bagga, the finance minister has hinted on missing the fiscal deficit target for this financial year. And if that actually happens, what sort of repercussions do you see on the equity markets?
There would be, Navneet, because especially the institutional investors have really welcomed the fiscal discipline that this government brought in. Unlike previous times when there would be 40,000-50,000 crores of unpaid subsidies, which used to get pushed into the next year, and we got into a very grim, vicious circle of not being able to manage the subsidy burden. Now with DBT and more streamlining, they have some amount of room.
Just lost out Ajay Bagga's audio. We'll just get that in a bit. But I think Navneet was asking about the finance minister's hint. Let's just actually get that transcript going, or what the FM had to say. He says, and I quote, FM on fiscal consolidation at the Morgan Stanley conference, that no pause but challenges arising from structural reforms which could change the glide path. I think this is a very important statement. He said recap will be performance linked. Announcement will one or two instances of consolidation in the SOE banks over the next 12 months. SOE banks to be encouraged to lend to MSMEs, and concerted policy to direct loans to MSMEs in the near future. So clearly two important things. One, referring to one or two instances of SOE banks events happening within that pocket over the next 12 months. But two, more importantly, just talking about whether the glide path would be adhered to or no. I think there was a reference to that point quite strongly at the conference.
So looks like, because he's talking about the glide path, and it's important to note that government accounting is not like the corporate accounting. It's actually cash based. So you account for the bank recap in the month or the quarter or the year in which you actually issue the bond and the entry is actually taken. So it's possible that the issue or the bulk of bonds may actually come in next financial year, and therefore the glide path, which had a target of 3% for next fiscal, it may not be achieved. But since we are not going to include the entire the recap bond into the fiscal deficit, it's only the interest part that comes in. So maybe he's also referring to some more stimulus coming in. It's also important that the next budget is going to be the last full-fledged budget before the 2019 election. So there is possibility that there will be more schemes that might be announced, or he may decide not to cut down expenses on some of the schemes which are already going. So that is the real hint, I understand.
Okay, that's about the fiscal deficit, but let's shift focus and talk about the individual stocks which are in focus. Global Spirits has been registering healthy gains and is up almost 9 to 10% in trade so far, I believe, and the counter has clocked gains of almost 60% in the last 1 month. What is fueling this rally in the counter? To answer this and to discuss the growth outlook for the company, joining us on the show right now is the Joint Managing Director, Mr. Shekhar Swaroop. Mr. Swaroop, good afternoon and thanks a lot for joining us today on Bloomberg Quint. All the liquor stocks today are rallying. I first want to check, is there any development that has taken place in this sector?
Good afternoon to you. I think the rally over the last few weeks in liquor stocks by and large has been to do with the limited impact on consumption that the highway liquor shop ban had. I think the streets had perhaps factored in a much larger impact, but that has not happened in the performance of the liquor companies. That is my reading on the larger performance of the liquor stocks. But specifically speaking about global spirits, the performance, the rally in the stock has been more to do with the strong performance in the fundamentals of the company in the last 2 quarters. We've seen IMIL business in Haryana, which is a strategic market for us, go up by about 45% quarter on quarter in Q2. Revenues on bulk alcohol have increased dramatically due to the West Bengal facility, which is a greenfield facility that has stabilized, and the profitability there is much more than the historical average of the company. We see that this performance should continue for the rest of this year and the years to come, considering that the gains made in the historic business in Haryana and in Rajasthan have been because of consolidation of our consumer business. And the gains in West Bengal is to do with the new factory. So it is certainly something that will continue.
Right. And what's the capacity utilization of these plants? And I also wanted to check what's the status of the Bihar facility. I believe you'd applied for renewal of license there.
Yes. So the capacities are all functioning at well over 90% capacity utilization. The metric that we track, the more accurate metric to track for us is what is the share of consumer business within each factory. And overall, we are at about 45% share of consumer business. But in Rajasthan, which is really our flagship currently, we are at close to 80% share from consumer business. So there is a lot of opportunity in Haryana and West Bengal for the consumer business to start doing better. So, in case of Bihar, as you're aware, the government had refused to renew licenses for distilleries, for all the grain distilleries in the state. And we have requested the High Court to clarify the position, and they had done that earlier this year. Thereafter, we have applied for licenses, and we are hopeful that we will get those soon.
Also, just an update on Haryana. I think Q1 that had an impact on your performance. How has Q2 performance been there?
So Q1 performance was in Haryana was more or less in line with Q4. I think the volume was slightly lower between the 2 quarters. However, Q2 in Haryana has been an improvement over Q1. And historically, we find that Q1 and Q2 are the low months for our business. And about 60% of the volume comes in Q3 and Q4, 60 to 65%. Despite that, the second quarter, we had an uptick in volume. So hopefully that will continue in Q3 and Q4.
Okay, interesting. So, tell me, Shekhar, I think, unless I'm very wrong, you clocked in about 800 crores of revenues in FY17. If I combine the 2 quarters that you've done till now, it's about 400 to 425 odd crores that you've done. You reckon it will be very, very easy to clock in that 20% odd growth over FY17? Because you did mention that 60 odd % of the business will happen in the second half.
Yeah, we are very confident.
More than 25%?
We are confident of a good growth in the next 2 quarters. We should reach 4 digits.
I mean, yeah, which I'm sure you will. But the idea was to able to try and figure out whether you believe that the growth rates would be about 20% or can it be much higher than that?
See, that's between 20 to 30% extra growth will come in on the back of performance of country liquor in West Bengal.
Okay.
And we have just started up that business earlier this year. So it will be very difficult for me to make a very accurate projection of the volume, but certainly we are looking at very healthy levels of growth this year.
Shekhar, last question from my side. Balance sheet is looking quite healthy. Your debt to equity is 0.6 times. But if I look at your finance cost in the first half of this fiscal, it's almost double if I compare it to the corresponding year. What's the kind of debt picture currently that you're looking at? Are there plans to raise more debt?
So, as I said earlier, that we had these 2 greenfield projects in Bengal and Bihar. So last year, same quarter, the interest on the borrowings for those 2 projects was being capitalized. Whereas this year, all that interest is now being passed through the P&L account as the projects have now been commissioned. At the same time last year, they were under construction. Therefore, the cost has in the P&L account looks to have gone up significantly. But from a cash flow point of view, this cost has been there for the last little bit of time. Be that as it may, we are seeing very healthy free cash flow being generated in the company, and we are very confident of our debt service capabilities.
Okay. Leave it at that, Shekhar. Thanks much for taking the time out and joining us and giving us that perspective. Ajay, before we let you go, and I hope we have you back, there's a bit of a patch where we lost you. But since we're on the topic of the fabulous quarter that the liquor companies seem to have thrown out, despite the highway liquor ban and other issues, and the confidence with which almost all of the companies have spoken about, is this a pocket that you would bet on? Expensive, but showing growth?
More for personal reasons, I don't look at this sector at all, Neeraj. So I would not like to really comment because I just avoid it totally.
Okay, let me try and ask you then about the next set of stocks that we are going to talk about, Ajay. And that's that entire box of companies related to Page Industries. Again, a set of companies that have shown strong growth, but again expensive. What would you do here?
I think India will remain expensive. We have seen that through our careers, Neeraj, and you have to look at growth for India. The value investors in India have really found the going very tough. I remember in the mid-90s when the first value fund was launched in India, and the equity fund used to give worse returns than its income funds. And we who were managing growth funds, we were about 3x, 4x of that value fund, and that also today you can see in the NAVs. So I would urge that go for growth, go for good managements. India will remain expensive, unless there is a global meltdown like 2008, when you found Nifty at 8,000. And those are once in a lifetime kind of opportunities. Whoever bought that is sitting, found Sensex at 8,000, is sitting on huge gains. So I would say go for growth. Time to stay invested. I don't really see a very strong kind of correction. Yes, these mild corrections will come where you lose 1 or 2 months of growth, but you look at the overall trend, that remains positive. I would be very careful shorting. FIs are hugely short in this market, while the prop books are very long. Retail, of course, is extremely long, and they're bringing in money in the cash also, cash segment. So I would be very careful in shorting this market unless you are very stock specific. Index level shorts, only hedging purpose, not for making money, that can really whipsaw a portfolio very strongly. I would still be bullish on the market overall.
Okay, thanks a lot, Mr. Bagga, for taking time out for us. And the stock of the day has to be Page Industries, which has moved quite a bit in today's trade, and in fact over last few sessions I guess it has gained 15 to 20% at least. Neeraj is here with more details I guess on the same.
Yeah, so the terminal today is just giving out trade patterns, Pradeep and Navneet, and not so much about the EPS, though I must point out this would probably be a perennial case for Page Industries, that consensus, because of the way the stock moves, that there will be more sells or holds as opposed to buy, and that doesn't surprise me. But here, I'm filling in the blanks here. After the numbers that came out, by and large, most brokerages were very impressed with the kind of numbers that Page delivered, and the sportswear side of the business did extremely well for Page Industries this time around, as a result of which the FY19 EPS estimates moved up quite a bit. So across the board, most people have gone in with revenue consensus estimates of close to 3,000 odd crores for FY19, and EPS consensus estimates of about 350 to anywhere between 340 to 375 odd. That's where the needle is typically moving in. Now look at that and then look at the stock price, and you would presume that on an FY19 basis to northwards of 50-55 times, is that cheap or expensive? It is expensive, but hey, when did you get paid cheap? You didn't. But the telltale signs of how strongly the stock has done is this. I mean, one, look at how this is of course the one-day change, but if you just look at the past few days, Page has been having a fabulous move. Look at the volumes today, and you will see it should come up on your screen. The way the volumes have moved up in the recent past, and the way today's volumes, as also over the last few days, the volume jump that has happened. If you can actually get in the last 1 month chart on the wall, just do a GP and 1 month, and you will see what I'm talking about. It's a big move that Page Industries has had over the last 1 month. This is probably for 1 year, but if you just click on the tab of 1 month right here, yes, and get that 1 month chart, you will see what I'm talking about. Look at the gains that Page Industries has had. This was the mean. From here, Page Industries moving up from 19,000 all the way to 24,000. This is not a mean move. This is a fairly serious move that a company like Page has done. Some of the other peers too have participated, not in the same vein as Page, but has done well. So seems to be that this pocket is in a sweet spot, and the results are justifying that, though nothing justifies the valuation but growth. The company is showing their growth. Now it's up to individual investors whether they want to bet 50-60p on a company which is growing at 20-25p, but has shown that sustainable growth for a really long time.
Well, clearly, Neeraj, valuations do appear to be expensive. The stock, if you look at it, price to sales is almost 13 times and price to book is 40 times. But the numbers have been good. The brokerages do have given a thumbs up. So that's Page Industries for you, a counter which has seen cash-based buying and also a lot of action on the futures and options space. Good time to get in our guest then. Ajay Bala, Chief Markets Technician, is joining us, and also Sacchitanand Uttekar, AVP Technical Equity of Tradebulls, are here. Good afternoon to both of you, gentlemen, and appreciate you joining us today on Bloomberg Quint. Sacchitanand, let me come to you. The market's Nifty is currently above the 10,200 mark. Clearly, there was that support which came in around the 50-day moving average, and maybe there was some bit of buying which came in at the lower levels. At 10,200 on Nifty, what should the trade be?
Well, good afternoon. I think you've already, highlighted the fact that the 50-day moving average has acted as a very good support. In fact, after 7 days of a stream one-way decline, there was an expectation of a bounce back, and this is what we are seeing in the market today. Overall, we have been talking about this broader structure wherein we have been highlighting the megaphone formation, and with the megaphone formation, the lower end of the formation is placed somewhere close to 10,000. So probably we are accounting this particular move as a mere pullback. 10,000, 245, 250, these would be in ideal levels when one should again reinstate short positions. Probably let this particular pullback move get extended for another day, and next week again the markets may start drifting lower. So on a broader structure, we are bearish on the market so far as 10,000 is not seen. And on the upside, I think 10,250, 10,280 could be ideal levels wherein this particular pullback move can get exhausted, and we may see again the market coming down towards 10,000.
Jay, if I can ask you, what is your thought on this move on the index today? It's a strong one, but it's coming after a series of lower moves, and I think it's bouncing off the levels that you had cited last week or last week. You had told us then that you believe that the 10,200 put, for example, could be a good purchase. I'm guessing you were eyeing those levels. We've bounced back from those levels. What happens now?
Yeah, the decline from the 10,490 high so far looks a little bit unorthodox. The low of yesterday, needs, if it had gone a little more slightly lower, it would have been a perfect thing. But the markets are not a perfect world. We got to take what the markets are giving. And so at the moment, I'm still thinking that what Sacchitanand pointed out, those two levels of 10,245 and 10,290 are pretty important. They are basic Fibonacci ratios there, and I don't think the markets are going to go there. I think it's already trying to weaken from here. I think a little further low below yesterday's low would the market were to even in fact penetrate slightly into the slightly below the 10,000 mark. That will be an ideal base for the market to attempt another push to record highs. So we are waiting and watching. We are of the opinion that little more downsides are left, something about 150 points on the Nifty. So if that were to be done, I think we can turn once again bullish for the short term.
So what about specific stocks, guys, that you are giving out? Sacchitanand, let me start with you first. A couple of stock ideas from your end.
Well, as we are looking at a bearish structure, Bajaj Auto is one particular name which we have been highlighting. In fact, recently we saw that the stock broke down from a rising wedge, and we have already seen a good pullback towards this wedge pattern again. So again, a fairly good opportunity to create short positions. We are expecting this particular move to extend right up to 3,100. Short positions can be initiated here. 3280 should be the stop loss for the trade. And one is on the positional side, but on the long side, in fact, the way some of the cement stocks have been reacting, India Cement is one particular name which has been oscillating within the range of around 190 on the higher side, and on the lower side, 170, 165 has been a decent support. So if you look at last two trading sessions, we saw a bullish Rami getting reinstated at the lower end of this particular pattern, and we are expecting that this rebound could take the stock towards 188 kind of a zone. So probably a long short opportunity. One on the short side is Bajaj Auto for a target of around 3,100, and long on India Cement with a stop loss close to 162.30 and a target of around 188.
Jay, what are you betting on?
Yeah, I think as I mentioned last week that the cement space is starting to look interesting, and and I had also said I'm bullish on Brent crude. I'm expecting Brent to cross about 80 to 85. So majorly I'm basing my play on these two. Basically, the jet has gone from 400 to 400 to 690, almost 700, and that it's had a long move, and the spike to 698 it looks like an exhaustion. So if jet is going to get further bullish, it is at this point it's going to prove us wrong. So we are trying to probe a short here in jet, and we are placing a stop above 720 and looking for the stock to fall below 640 or maybe even 620. So we have one shot on jet, and I'm continue to be bullish on the cement space. And JK Cement is one name that I like it at this point of time, and I think it's not going to fall below 950. From the current levels, I think it's heading to record highs closer to 1,300 plus. So look for this name to do perfectly all right in the next few weeks.
We'll scratch that point, Jay, about crude as well a bit later on in the show. Sacchitanand, with you as well, talk about some of those stocks that you mentioned. But before we get in our fundamental guest on board, Pradeep too has an interesting chart today. He's joining in the party. Pradeep, Bharti Infratel, what is interesting about this chart?
So the most interesting point that you can see on the wall is Bharti Infratel is actually taking support at 200 days moving average. But that is not all. This has been an outperforming stock if you look at last several quarters, maybe not so such an outperformer over last one quarter, an underperformer actually recently. And you can see the dip that we have seen in this stock over last few weeks or say a month and a half. This has been a lot of news driven move actually because parent company has been selling stake. And after that sharp decline, when a stock comes at 200 days moving average, it becomes interesting. 2 points I would like to highlight here. Not only that we have kind of tested the level yesterday and we are holding above that mark, but also if you look at it, the recent swing trade were not retested even in this decline when there was so much supply in the market. It got absorbed without hitting the previous swing low. So this kind of gives us some confidence. Then if you look at the 200 DMA, last time around also we came very close to that and then bounced back. So this is an important moving average that the stock probably follows. But if you look at the oscillator, and we have RSI here in the bottom, you can see that this stock beautifully tracks the RSI, and if you were trading Bharti Infratel based on RSI, you would have definitely made money whenever this stock was oversold and it was close to the 30 line, that is the green line at the bottom. And RSI has also kind of moved up, has given at least one reading today, which hints at a reversal from the bottom of 30. So that way is also the move is also supported by the oscillators. And if you look at the risk reward ratio here, suppose you put a stop loss at the 200 DMA, which is around 372 right now, I think the risk reward ratio also seems quite attractive. So in this market, if you're looking at reversal in Nifty and Bank Nifty and Sensex and looking at a stock which has fallen quite a bit, is a good outperforming stock, can bounce back, I think for a trading move, this looks an interesting story. But mind you, this is not a recommendation to really trade.
Thanks for that, Pradeep. Well, there is an update. The Reliance Group stocks have recovered. Pull up Reliance Communication, pull up Reliance Infra, Reliance Power. They have seen a sharp recovery in the intraday session. There you go, Reliance Communication trading with gains of 14%, Infra up 7%, Reliance Power is up almost 5%. And let's also look at the recent listing, Reliance Nippon. That's also seen a bit of recovery coming about. And also Reliance Capital, I also feel that's trading in the positive. Both these two stocks will come up on your screen. Reliance Capital just in the green right now, and Reliance Nippon will also come up on your screen. Well, remember there was a sharp fall, or rather selling pressure, which came into the Reliance Group stocks in yesterday's trade, but a bit of recovery seen in just the second half of the session. Reliance Nippon AMC now trading with gains of as much as closer to 7%.
I'm not surprised with Reliance Nippon in particular.
Yeah.
You could argue about what's happened to some of the others and the bond repayments, so on and so forth, but this one was insulated. Sure. 81 times subscribed. You would assume that people have subscribed with entire knowledge of what the books are about. So from 252, which was the issue price, to 270 in a matter of a few trading hours. Not surprising, this one at least.
I think we did discuss this yesterday.
Yesterday as well.
Yeah, it was a rub-off effect seen on the entire group with the Reliance Communication failing to pay its interest on two of its debentures. But good time to get in our guest, Dipan Mehta, member at BSE and NS, who is joining us on the show now. Mr. Mehta, good afternoon and thanks a lot for joining us. Well, the ADAG group stocks, rather the Reliance group stocks, have seen a sharp recovery. Anything that you're gathering from the market? We know this is one group which is over leveraged, and probably that's the reason why there has been some bit of selling pressure.
Yeah, I think there are concerns around the liquidity as well as the solvency issues with one of the companies of the group. And to that extent, I think investors are fearing a contagion effect, which is why the other group companies also have been correcting. But at some point of time, I think, some opportunistic buying may have taken place. And investors may have felt that value is there in buying the other stocks of the ADAG group companies, which are not impacted by the troubles, which are there with ARCOM, which is what we are seeing just now. But I think, this is still a bit of a gray area. And I think from a long-term conservative investment point of view, these stocks still need to be avoided. I think in terms of valuation, some of the performing companies also have not reached attractive bargain valuations.
Okay, Mr. Mehta, what other stories or the stocks have you been looking at as an opportunity to buy in this correction?
No, see, we are not completely convinced that the correction is over and done with. I think that the recent inflation number as well as the rally in the G-Sec yields which has taken place do suggest that interest rate reduction is now kind of not going to be happening in the near future, at least for a long period of time, and therefore the price earning multiples are getting compressed at this point of time. And I think this process of compression of price earning multiples may have some more way to go. So although this rally has taken place today, we are not looking at buying into the rally. maybe even if it rallies further, then it may be an opportunity to lighten up on the portfolio even a little bit more. We could be in the middle of a slightly more deeper correction. Although the long-term bull market remains pretty much intact, I think we are going to see one of the more kind of technical or fundamentally led correction, which could be as high as maybe 8 to 10% also. But calling the markets is difficult. But even at this point of time, from a valuation perspective, there are not many opportunities. So rather wait for a correction than buying stocks at these levels.
Fair call. Dipan, afternoon, Neeraj here. What's the thought on technology? I remember a conversation that we had maybe 6 months ago wherein you had mentioned that you weren't quite looking at that space favorably. I don't know what your stance is right now, but did Q2 make you change that stance, particularly at the broader end of the spectrum, the mid-cap IT pack?
No, I have to admit that Q2 for a few mid-cap IT companies was quite interesting. Could be the base effect, could be the forex gains which they had got on the hedges which they had taken. But yes, I think Q2 was better for the mid-cap IT companies, and there could be a trading bounce also as well over the next maybe few months or so in these companies. But by and large, the sector view remains negative. And although mid-cap IT companies may have shown a decent performance, kind of a double-digit performance for the September quarter, we are not convinced that this kind of performance is sustainable going forward, and it's going to be very challenging for the entire sector to deliver growth. So our view still remains that stagnation will prevail in the sector, and it's not great for investors to get returns if there's stagnation in a sector. So while there could be trading bounces because stocks get oversold, valuation becomes extremely attractive, dividend yields come into play, buybacks come into play. So you could have trading bounces from time to time, but a 3-year, 5-year view on IT from a long-term investment perspective has to be completely avoid the sector.
Okay. Fair call. A pocket that has done really well, Dipan, in the session today, as also post earnings, is this whole liquor space. Now, is this the general exuberance that comes in because of how well almost all of these companies did despite the highway ban on liquor? Or is there more to this? I mean, because quite frankly, if one thing stays common between this and the other consumption names is the valuation metrics. Almost all of these, large, big, small, are trading expensive.
Yeah, that's true. But what this quarter did display for the sector as a whole is the resilience of the industry. That despite such massive challenges like the highway ban and many states not increasing prices for the end products, they have to deal with input cost increases as well, and many other challenges which these companies had to face. Yet they had this kind of performance. Top line slightly muted, but definitely there was good operating leverage and growth in the bottom line. Shows that the inherent fundamentals of the industry are very strong, and market is perhaps giving a higher valuation because they know that to an extent all the challenges are over and done with. I think if you see the transcript of United Spirits, the MD clearly states that the worst perhaps seems to be behind them, and they've been able to manage all the challenges over the past 6 months or so, GST, demonetization, the highway ban, and now going forward I think they're going to enter more stability, better growth dynamics as well. And these are businesses and companies where if you get marginal volume increases or price increases, the operating leverages come into play, and that results in a much higher growth in the bottom line. So we are per se very optimistic on the sector as a whole, and if the correction should deepen further for these markets as a whole, and these stocks also maybe correct 10-15% from these levels, it could make an interesting bet. Having said that, a disclosure that we and our clients are invested in United Spirits, and that still remains on our watch list for buying at corrections.
You would only bet on the big boy. You wouldn't go in for the smaller ones. I mean, we just spoke to one of the other companies as well, Global Spirits, and they sounded fairly optimistic too. You will still bet only on the big boy?
See, depends upon your risk appetite, and typically we manage public money, so we would like to be more conservative in our approach, but certainly investors who have a more aggressive stance could look at getting into some of these smaller liquor companies. But actually the problem over there is that there is a great deal of inconsistency and volatility in earnings, because typically these companies have just 1 or 2 brands or so, and these are the leaders, and if something were to happen to those brands, any bad news or any marketing related issues or any issue with the regulator or the state government, then those companies, when the profits get knocked off, the exit becomes extremely difficult. Whereas United Spirits, no doubt, is expensive, but then you look at the kind of market share which they have, the brands which they have, the strategy which they have in place in terms of premiumization and the cost reduction programs which they have put into place, and the way they've managed this entire crisis. I think you have to hand it to them that there's a great deal of visibility in the earnings and great deal of confidence that the company will be able to grow its top line, bottom line, and be able to deliver consistent results. And these are great compounding businesses, as we have seen in the in the FMCG space. And see, India also is moving up the curve as far as consumption patterns are concerned. And we are moving up from buying soaps and detergents and toothpaste to liquor, and it's a great play on rising domestic consumption as well. So very optimistic on the company per se.
Okay, Mr. Mehta, we would like you to share your views on the Bharat 22 ETF as well. But before that, let's hear out the government side first. The issue has so far received a good response. And the retail segment is also expected to attract a very strong response. This has made the Disinvestment Secretary Neeraj Kumar Gupta a happy man, who is delighted that foreign investors have also put in bids for the exchange traded fund. Speaking to Nikunj Ohri, he says the aim is not to rush through with any divestment program, just to meet the target of 72,500 crore rupees.
Bharat 22 has received very positive response. The anchor book has got oversubscribed 6 times. FIIs, which have not been coming in big way except in banking stocks after recapitalization and some other stocks, they have come in a very big way for Bharat ETF 22. Even DIIs, which are even higher than the FIIs in even this segment, insurance, pension funds, everybody has taken this very positively. Retail response is very good, and we are getting good response from pension funds. It is open for today and tomorrow, so I am sure that we will have a very positive response, and will try to satisfy as many investors as possible.
Okay. And sir, as far as the divestment target for this year is concerned, it's 72,500 crore rupees. Part of it is assumed would come from HPCL ONGC deal. So can that be assumed that the completion of deal would happen in this year, and how hopeful are you in meeting the divestment target?
Actually, this is one area where we cannot work on presumptions. Every deal is complete only when it is concluded. Both the companies are listed companies. ONGC may be looking at it as a dream acquisition, because by acquiring such a company, they become 6th largest company in the world and first company in the country which is fully vertically integrated. But that does not mean that both being listed companies, this deal can be rushed through. The process of meticulous planning, compliance of all rules and regulations, and then completion of the deal has to be there, and once the deal is done, then only it can be treated as concluded. I cannot set a timeline for that.
Okay. My last question to you, sir, when do you see the Air India divestment getting completed?
See, whatever strategic divestment government has agreed in principle, they are all progressing as per the given timelines. We are working meticulously on all the deals, and I promise you that there will not be, but none of them will be rushed through. They will all be done in a very proper and meticulous manner. And in Air India also, the progress is being done as per the given mandate to us.
So we'll have to wait for the Air India divestment. But Mr. Mehta, do you like the Bharat 22 ETF?
See, per se, we are portfolio managers, so we compete with mutual funds. So I wouldn't have a very positive view on any mutual fund scheme for that matter. So I'm not the right person to ask that question. But per se, I think they've taken all the underperforming PSUs. I mean, PSUs have been largely underperforming in this bull market, and combining them into a fund and expecting that the fund will outperform. I'm not really convinced of the prospects. I know demand is great as of this point of time, valuations also on their side, but then these companies have a pretty disappointing track record over the past 4 or 5 years or so. So from that point of view, I advise you to avoid the offering completely.
Okay, that's the view on the Bharat 22 ETF. But let's just quickly pull up Infosys. That's your top gainer on Nifty right now, and it's up as much as 4%. And actually, it's come off little bit days high, almost up 4%, trading around those levels of 986. So clearly, after a lot of sessions, good gains seen for the IT major today. But talking about the small cap stock, which is the buzzing stock for the day, let's go across to Nikki Merchandani to find out. Nikki?
Hi Navneet, clearly not a small cap though, it's a buzzing stock. All the liquor stocks are in high spirit and Radico Khaitan is one of them. If you look at the chart, if you look at the performance of the stock, it's risen as much as 18.9% and it's hit a record high level. Volumes have, pretty much moderate at 5 times the 30-day average volumes on NSE. Well, joining the party, all liquor stocks as I just mentioned are trading up. If you look at the other stocks such as United Spirits and Global Spirits, GM Breweries, they all are trading up with gains of in the range of 4 to 8 odd percent. The company, specific to the company, it's in group meeting with MK Global. It's having a one-on-one meeting with that. The other meeting that it's going to be holding is tomorrow with IDFC Securities. Navneet, if you were just supposed to look at the trend, the profitability performance of the company, it's a good show coming in by the company for this quarter. If you look at the net profit, that's almost risen by 27% at 28.6 crore. And the revenue for that matter has also risen by good. It's muted performance on the sales front though, but then the margin, there is a cost efficiency coming in by the company at 15.3% at a figure of nearly 65 crore for that matter. Margins have expanded too. But if you look at the profitability trend, it's a good multi-quarter high for the company that we're looking at. It's almost 12-quarter high profits that the company has recorded. And if you look in terms of the valuation, then it's the highest P that the company is demanding as compared to some of its peers like Som Distilleries, Pincon Spirits and GM Breweries. It's trading at a P multiple of nearly 32 times. It's an older manufacturer of IMFL in India with a market capitalization of around 3,369 crore.
Leave it at that, Nikki. Thanks much for joining in and giving us that perspective. We've discussed these liquor stocks for sure at length today. In fact, Sacchitanand, if you can come in on any of these names, all of them are showing an uptick. Is there a trade possible here? Okay, I don't know if Sacchitanand yeah, Sacchitanand, if you can. Okay, I think we've just lost Sacchitanand Uttekar. Jay, I don't know if any of these stocks fall within your list of stocks that you track, but liquor companies, if not anything, then United Spirits.
Definitely, one of these is definitely my favorite. We spoke about it about 2-3 weeks back, and we had even had a call on United Spirits. The next day, the stock was up 22%, and GM Breweries, I said it's for the long term. That stock was locked 10% upper circuit on the next day. So I still continue to be very bullish on GM Breweries for the medium to long term. I think GM Breweries is going to go past the record highs made in 2015, 2016. I'm expecting a price level of about 1250. So even at this level, it's going to be attractive to put money in GM Breweries. But I would caution that what if you had followed what I said a couple of weeks ago, the risks would have been much, much lower. So you got to allocate much lower capital at this point of time. Generally, liquor companies tend to do well when the markets are correcting. And, I think it looks like that's what is playing out at this point of time. But even otherwise, I'm very bullish on GM Breweries. I think it's going for record highs past 1250.
Okay. Dipan, one last question from my side. If you look at today's gainers, you have Manappuram and Muthoot, Cholamandalam Investment and Aditya Birla Capital. NBFCs are in fact leading this move up between 5 to 10% actually. Where there has been so much of talk that probably money will now shift from NBFCs to PSU banks. Do you really see that happening, and would that be your strategy as well?
No, not really. I think, PSU banks, even after the recapitalization, they have a long way to go in terms of improving their service quality, investing in technology, investing in manpower, getting the distribution right, getting the risk management right. And there are many other structural problems with PSU bank, because of which they will consistently and continue to lose market share going forward to the NBFCs and the private sector banks. And therefore, from a long-term investment perspective, we have to bank on the private sector banks and the NBFCs, where overall there is increased demand from retail for financing. At the same time, there is the entire PSU loan book which is up for grabs in terms of increasing market share. So I think these companies, the NBFCs who have got their act in order, who've got the product and distribution and the risk management in place, are in a secular growth momentum at this point of time, and they can consistently grow their profits for the next 3 to 5 years. So from investor point of view, you will get compounding, benefits of compounding in these companies, and even from these levels, we are very positive on a whole host of NBFCs. Although the view may be negative on the market in the immediate short term, I think in corrections, NBFCs are something, are stocks which investors should certainly tank up on.
Anything that you, Dipan, I don't know if you're at a liberty to disclose, but I'm not asking you for a buy, sell or a hold recommendation, but anything that you own in your portfolios that you can talk about within the NBFC space?
Sure, with usual disclosure that we and our clients are invested, our top pick is Bajaj Finance, and there is Capital First also, which is quite interesting, and Manappuram, but that has had a disappointing quarter so far. So by and large, these are the top 3 or 4 picks, and there's PNB Housing in the housing finance sector, which we are very positive on. So we have a fairly large exposure to NBFCs and also very positive on private sector banks like IndusInd Bank and even Bharat Financial Inclusion, which is getting merged with IndusInd Bank, as well as Yes Bank, Kotak Bank. So all the private sector banks also find place in our portfolio.
Dipan, good having you. Thanks much for taking the time out and being with us today. Look forward to have you more often on this forum. That's Dipan Mehta with his thoughts on markets, some specific ideas as well. They are overly bullish on the NBFC basket. Just before we let's get in those thoughts from Jay Bala first before we move on and talk about the global markets. Keep in mind, the Sensex is up 1% already and the Nifty is nudging in on the 1% mark. So the benchmark indices by themselves are doing very, very well, supported by the Nifty Bank. But Jay, banks, NBFCs, we were just discussing that basket that's doing rather well today. Anything that looks right for a trade?
See, here banks, you got to separate the winners from the losers. I think the Axis banks that I spoke about a couple of times the last week and the previous week is actually outperforming the markets when the others are actually falling. It's managed to actually hit 52-week high. I think it's just starting to warm up. I think it's got further highs to come through. But if you had bought it around when we spoke about it on the Muhurat trading day, we were bullish on it and we had said all the negatives that was there is going to disappear in the next couple of days, and it did happen. And buying at this point of time the risks are a bit elevated, and so you got to allocate capital that should be slightly lower. There are still good picks within the banking space. Federal Bank, Karur Vysya Bank, they've all gone through a good correction. Karur Vysya Bank in particular has gone through a good correction. I think it's ideally poised, and the 200-day moving average is right below it. I think it's ideally poised to take off from here. And even Federal Bank, once it crosses 120, 125, I think it's going to go for a big breakout close to 160, 180. I think even that's looking interesting at this point of time. So, allocate sensibly within the space. Not everything is going to be a winner.
Okay, the other pocket which is doing well in today's trade are the mid-cap cement companies. Pull up Heidelberg Cement. That counter has touched its fresh 52-week high in today's trade. It is trading with gains of almost closer to 8%. And not only Heidelberg, you've got stocks like Sanghi Industries, Orient Cement, India Cement, JK Panyam, you name it, and all these mid-cap cement stocks have seen a bit of surge coming about. Orient right now trading with gains of almost 4%. Jay, anything in the mid-cap cement space that excites you?
Yeah, I pointed out mid-cap cements is the name to play last week, and not the frontline names. I already mentioned about JK Cement, and you had also pointed about Orient Cement, and I like that name too. But my top pick within the space still remains to be JK Cement, because I think it's going to cross record highs past 1300, and the risks at this point of time is quite limited compared to the reward it's providing. So JK Cement is the top pick for me within the cement space.
Okay, JK Cement is the top pick from there, but moving on to the Fab 4 stocks of the day, and to take us through the same as usual, Yash Upadhyay joins us. Yash, over to you.
Good afternoon, Navneet. It's great to have the markets back in the green, almost a percentage point as we speak. Makes it easier for me to find the Fab Four stocks. But we kick things off with automotive axles, and the stock has gained close to 8%, led mainly by a strong set of numbers for the second quarter. We managed to catch up with the management of the company, and they sounded very bullish for the future, forecasting a 30 to 35% growth for not just the coming quarters, but until FY19. So do watch out for this one. Surya Roshni is another stock on our radar, up almost 7.5% after the company received an order worth close to 90 crore rupees for the supply of LED street lights. Suven Life Sciences is up almost 4% today after the company received the product patent approval in Hong Kong, US and India for a period valid up to 2034. The product for which the patent has been received is used for the treatment of cognitive disorders. So good news there for Suven Life. And lastly, we have CMAC Limited. The stock is locked in a 5% upper circuit after the company's board of directors approved the scheme for the demerger of the EPC and vessel division of its subsidiary HAL Offshore.
Okay. Thanks a lot for that, Yash. So that's an interesting mix of stocks. But yeah, it's probably relatively easier to pull up winners. But Yash spoke about automotive axles and that management spoke to us today after its earnings and was confident about demand increasing this year and the years ahead. Here are a small slice of what he had to say to us.
We have shown our agility in terms of delivery, and we shown in terms of our changes in the product that has happened in the market. We could be able to deliver well, which has taken our sales growth much ahead of the growth in the market. So we see a good market, a very, very solid market in the next 2 quarters, at least for sure. And we are gearing up to produce similar results. There is a clear shift in the market in terms of the multi-axle vehicle. There is a clear shift in terms of the infrastructure spending, particularly to the tipper model. So we see very, very strong demand, not only for the next 2 quarters, but also going forward in the next year also, FY18-19. We are focusing on improving our operational efficiency consistently, quarter after quarter or month after month. But there's going to be a huge pressure in terms of the conversion and the cost escalation that is happening now. So always profitability will be under the constraint between the customers and the cost increases from one side. But we are confident that with our people and our capabilities, we'll certainly beat the expectations and grow forward.
All right, that stock is doing rather well, but yeah, the management was fairly confident about what the next few quarters could look like. Jay, before we let you go, as I said, I wanted to talk a bit more about the crude forecast that you did. Now, what's the timeline that you're setting for your targets on Brent? And as a result of that, are you taking any trades on the markets? Long ONGC or short any of the OMCs for that matter?
Yeah, I think you're trying to point out the idea is forming on my head, but I'm bullish on crude. I'm positive that it's going to hit to about 80, 85. Downstream sector is going to underperform and the upstream is going to do well. And I still have a pending upside target for Reliance. So, at this point of time, maybe a long Reliance, short HPCL, BPCL might make a relative trade by remaining neutral on the market. You can be rupee neutral and go long on one of these, upstream companies and short on one of these downstream companies. But to be very clear, my top pick within the upstream space remains RIL. And, if you have to go short, I think it'll be a HPCL. So I would rather go long RIL, short HPCL on a rupee neutral basis. And at this time frame, I'm looking for crude to hit 80 to 85 is about something like in the medium term. So I'm expecting the price levels to reach somewhere between 12 to 20 weeks time frame. So if it reaches those price levels earlier, it could. But normally this is the time frame I'm looking at, 12 to 20 weeks.
Okay. Jay, good having you as always. Thanks so much for taking the time out and speaking with us at Bloomberg Quint.
Thank you.
That's Jay Bala with some of his thoughts. Cement, I think, remained one key area where he believed there are long positions that are ripe to be taken. So do watch out for that as well. Just before we move on to the FNO space in a minute from now, want to mark what the global markets are doing. So the European market should come up on your screen. Just to give you a sense of how that side of the world is looking like. I think a bit of a positivity there. My guess is that the Dow futures to could be positive, but we'll get to that in a bit. Just keep in mind that Europe is not doing all that bad. In fact, let me just pull up the Dow futures for you. Yep, 57 points in the green currently for the Dow futures. So we'll have a start in the green for the US markets as well as things stand. But 3:10, that time of the show when we tell you what is likely to enter into the ban or come out of the FNO ban. Nanit, what does the list look like? It was a full cricket team when we started off trade today. We ended trade
but there are more stocks which are featuring in my list. I'll start off with the stocks which can enter into the ban. I've been talking about Granules India almost every day, and that's just at the borderline of 94.5% limit. Remember, it has to breach the 95% mark, and I can see a bit of open interest addition coming for a couple of the option strikes. So let's see whether that enters into the ban period or not. TV18 broadcast in the past few sessions, if you look at the overall open interest as a percentage of MWPL, has been hovering in that range of 89 to or 92%. That's also one of the candidate to be entering there. And IFCI and Indo count, remember this is the counter which surged in the second half of the session yesterday. Let's see, open interest yesterday increased to almost 90%. So that's one of the other counters which can enter into the FNO ban. Remember, for a stock to enter, it has to breach the 95% mark. Well, stocks which can come out, India Cements, that was 82% yesterday if you compare it to the MWPL. So that can also come out. I was just checking the India Cements November futures actually, and we have seen a bit of unwinding there. The other two stocks, look at that, open interest is actually down 1%, but we still have to wait and watch for the final data which comes out in the Bhau copy. And the other two stocks I was talking about are Just Style and India Bulls Real Estate, which is just at the borderline. So it has to breach the 80% mark. It has to fall to 80% in order to come out of the FNO ban. And also for India Bulls Real Estate, this is the second last series for the stock to remain into the FNO ban. And Neeraj, if you give me the liberty, just two stocks I want to pull up right now. They're not the FNO stocks. They're just popping up on my screen. Pull up GNA Axles. That surged almost 17 to 18% in just last 5 to 10 minutes of trade. I guess there you go. It's up as much as 17%, trading above that mark of 400. And remember, Marico was one counter which is in the FNO space. It was seeing some bit of profit booking last two sessions, but look at that. It's almost trading at day's high with gains of 5% now.
One more stock, if you could add, is First Source Solutions that we discussed earlier. The stock is now close to 41. That was probably an important intraday target. First Source has gone to 40.20 now. And what is interesting here, this stock has regained almost what it lost over last 7 or 8 sessions. So loss of 8 sessions, recovered in just one, up 11% now.
Wow. Well, let's wait and watch if there are some deal streets or anything that could be in the offing, but it's a sudden move. Remember, First Source typically stays in the realms of some of the other deal brewing. Let's wait and watch if it is the case this time around or no. However, let's hear out from some market voices. Valuations are expensive not only in India but across the globe. That's the word coming in from Bhanu Baweja. Speaking to Bloomberg Quint earlier in the day, Baweja also said that he's worried about the rising crude oil prices. Let's listen in.
I am nervous, certainly from an India context. I mean, there's a very clear relationship between India's relative performance to emerging markets and oil prices, and I'm quite nervous about that. And I'm quite nervous about that in the context of what's happened in geopolitics in the Middle East, right? Especially in the last month or so, a lot has changed in Lebanon, a lot has changed in Iran, a lot has changed particularly in Saudi Arabia, that one can't take for granted that you won't get volatility in oil prices. Typically, when oil prices shoot up aggressively for supply side reasons, they come down equally aggressively in T+1. Sure. But nonetheless, I mean, that induces tremendous volatility. And at these levels of valuations in India, you don't have much room for error. So I think the risks for oil prices are increasing. As a base case, obviously, since it is an unknown, you don't think about oil prices going to 80 because of geopolitical worries. But I think the risks along those dimensions are increasing. And I think investors should be wary of that.
So you believe that stocks in India have gotten far too expensive?
I think that's not a case just for India. I think that's a case globally. As I said to you, the discount rate globally has remained extremely low, and in fact, you could argue it has fallen even further from very low levels. So I think valuations are expensive in India, unambiguously, but valuations are expensive everywhere. The question is, are we reverting to the mean of valuations anytime soon? And I think we won't. Right? India has idiosyncratic reasons why that won't happen. The mutual fund money, which has continued, I think can continue for a while yet. But globally as well, the cost of capital has fallen, and therefore for us to say that S&P is at 1.5x when X is the mean and it's going to go back to 1x, I think that is at best a 5-year comment. It's very difficult to see the cost of capital adjusting upwards in a hurry, given the kind of disinflationary pressures that we still have in the global economy.
You alluded to mutual fund money. It's been a milestone year as far as MF flows for India is concerned. You have seen, however, foreign institutional money sell out in the last couple of months at least. Do you see emerging markets continuing to be a favorite for FIIs, and will India find favor in 2018?
So 2 questions there. The first question, emerging markets, I think they will remain in favor, at least in the near term. I think the triggers that actually get people to turn the other way would be a turn down in the tech cycle. As I said to you, that has been sort of the core of what this rally has been driven by. That possibly can happen in Q2 of next year, because what I don't believe is that we have an emerging market growth renaissance.
Correct.
I don't think we have that at all. In fact, this year it has very largely been commodity countries like Brazil, like Argentina, that have done extremely well in terms of growth. You haven't had a growth renaissance elsewhere. Again, it's been valuations ticking up. What kills that is if growth in the one sector that has driven all of this turns down substantially, and that would have to be tech. There's a strong risk of that happening in around Q2, but in the very near term, I think that sentiment remains positive for emerging markets. Now, does sentiment become much more positive towards India? As you said, the locals have been buying, the foreigners have been selling. In a world where the US is taking on the baton of growth from China, India actually stands in pretty good stead, because India's cost of capital is not driven entirely by the US.
Right.
If you look at the 10-year G-Sec in India, it doesn't have a beta of 2 to US yields, unlike a Turkey, unlike a South Africa, where you're very financially geared to the US. So in a sense, India is more operationally geared to the West than it is financially geared to the West. So it benefits from the West improving, but it doesn't hurt from the cost of capital going up in the West. So I think people will get a little more positive in India and a little less positive on the high beta places in EM. They will get a little more positive. But the question again remains, the valuation versus reality gap is wide everywhere. It's particularly wide in India. So in that sense, I think India, particularly relative to the rest of Asia, is going to be a neutral at best for most investors, rather than a tactical overweight. The structural overweight, I think people understand that, you know, the demographic story and the staple story, I think that will remain in place. But tactically, there isn't a switch that will get India to get, that will get emerging market investors to get tactically overweight India anytime soon.
All right, 15 minutes to go for markets to close, and it's time to take a look at what are the dealing rooms recommending. Yatin Mota and Darshan Mehta are here with their channel checks. Yatin, over to you first.
Thanks for that, Navneet. SBI, that is one stock we need to watch out for, and there is a speculation in the market that the government might announce recapitalization for banks, a small tranche today, and on the back of that speculation, a lot of PSU banks are active. In fact, dealers are recommending a BTST as far as State Bank of India is concerned. Also, Infosys, watch out for the entire IT pack, especially Infosys. That stock has moved above its 200-day moving average. So, you know, after a long time and long consolidation, we are seeing some buying emerge in a stock like Infosys. And, you know, the stock is up 4.5%. So clearly good buying and good volumes as far as IT stocks, including Infosys, is concerned. And watch out for Dixon Technologies. That is one stock which saw some, you know, block deals happen in trade. And after the block deal, we saw HNIs also participate, you know, in the rally. So domestic funds and HNIs are quite active as far as Dixon Technologies is concerned. Darshan?
Okay, AB Capital is one of the counters which is rather active. It's up almost 5%. Domestic brokerage is actively pushing this stock to its clients. So that is one of the counters which is seeing significant amount of traction that is coming in. Manappuram Finance is seeing significant amount of buying. Some of the domestic funds are actively accumulating. So Manappuram Finance, I don't know whether there's any deal or no, but certainly there seems to be a lot of traction here. And MRF, an old marquee HNI who's already invested in the counter, is again accumulating the counter at these levels. And that is something that dealers are talking about.
Many thanks for that, Darshan. So, interesting set of names. Mayuresh Joshi, fund manager at Angel Broking, is with us on the show as well. Mayuresh, thanks for being patient with us today, and thanks for joining in as well. Since we are talking about what dealing rooms are doing, and there are a couple of pockets that are coming out from there. Firstly, tires, MRF, or for the matter, some of the others too, with rubber consistently falling. Is it a good trade and is it a good investment play? Any of the tire names? Take your pick.
So again, I think with rubber prices, Neeraj, coming down, obviously the cost in terms of EBITDA margins
obviously stay very, very stable for these companies. But again, I think it's a situation which changes rapidly every 3 months. But having said that, with the kind of anti-dumping duty which has been imposed specifically on the MHCV segment, expecting good amount of volume growth to probably take place over there. And with realizations expected to improve both on the OEM and the replacement side of the market, my sense is that the leverage should play out for a few tire company balance sheets. So yes, I think CAT, Balkrishna Industries is something that I've liked in the past. So yes, I would continue holding these stocks and probably retaining a positive outlook on them.
Okay. The other bit, Mayuresh, that we are spotting is this whole set of mid-cap IT companies which are doing rather well. In today's session too, Sonata Software is up 5%, First Source Solutions is up about 10%, a couple of others as well. What have you observed here? Is there anything that you like here?
From the mid-cap space, I think two stocks which I've liked. I think Cyient is something that were liked over a period of time. And my own sense is that the kind of volume growth that one can expect, both in terms of client wins, plus the expectations of maintaining their margins around 13-14% I think that should sustain going forward. And as I said, I think the services segment should show a double-digit growth, as well as the design-led manufacturing, the DLM segment, almost 18-20% kind of a growth. So that should lay impetus to the earnings growth that the company can post going forward. And Hexaware has reported a very strong set of numbers in the quarter gone by. Again, I think the kind of products and services that it possesses, I think it's got a very strong pedigree in terms of the niche offerings. And if they can repeat their performance in the quarter to come, I think you'll probably see sustenance in terms of the price movement as well as the valuation multiples. So yes, I think these two stocks is something that I will keep on preferring from the mid-cap IT space.
Two mid-cap IT stocks which have seen a kind of price volume movement today. If you have a view on that, one is Sonata Software and other is First Source Solutions. Are you tracking both of these? Do you have a view? Mayuresh?
No, not on these ones specifically, Pradeep, but my own sense is one really needs to be a little bit selective within the IT space. And largely, again, I think the headwinds are not totally out. So you're going to still see headwinds coming through. So I think very few niche companies will probably keep on doing well in a challenging environment, which is typically the second half of the financial year, where a lot of discretionary spending patterns are decided and a lot of furloughs and Christmas holidays around the corner in Q3. So I think headwinds are there for the sector as a whole, but I'll be very, very selective. So I think Cyient and Hexaware is something that will continue to prefer. The other two might do well, but I'm not tracking them very, very closely.
Let's just pull up the intraday chart of Union Bank. It's up almost 5%, and in fact the entire PSU banking space is buzzing. It's almost at day's high, up 5.5%. In fact, the Union Bank November futures have also seen good amount of open interest build up. Yatin was mentioning that the first tranche of recap could be announced tomorrow, and on back of which we've seen good amount of momentum in the entire actually PSU banking space. The Nifty PSU banking index is up over 3%. Mayuresh, anything in the PSU banking space after that news of recapitalization? Which bank, according to you, could gain the most?
So I think the entire sector on the PSU space probably will react sentimentally, and they have already done that. But what happens in terms of the quantum, the tranche, and how they're going to do the entire recapitalization process, I think is going to be very, very interesting over the next few weeks and months. Having said that, I think SBI and Indian Bank is something that I had liked in the past, but the moment has been too sharp on these counters. So out of the entire lot, I think Bank of Baroda has given a very good set of numbers. And looking at the management commentary, I think if they're able to maintain the kind of performance that they have and probably stabilize the asset quality like the way they did in Q2, again, there would be a significant re-rating in that counter. And within the mid-cap space, Vijaya Bank on declines is something that I'll still continue to like. I think the gross NPAs have been brought down, the net NPAs have been brought down. We've seen significant growth in NI and PAT terms of 20-odd%. And again, from a valuation perspective, looks interesting. So the management is able to pull down the asset quality pressures, at the same time maintain their overall top line in terms of advanced growth. My own sense is that credit costs will start dwindling down over the next few quarters, leading to return ratio improvement. So I think Vijaya Bank remains one of my preferred picks on declines in the mid-cap PSU space.
If you look at some of these stocks like ADF Food, and you also have Reliance Power, which has moved in last few minutes of trade. Also, you have some more stocks like Saregama in the small cap space, which have been gaining. IMP Powers is yet another mid-cap stock which has gained further in last few minutes of trade. So quite a lot of mid-cap and small-cap stocks, in fact, continue to move up and are now close to the day's high. So there is continuous momentum and there is no profit booking in these stocks as yet, as you can clearly see. Even in the last minutes of trade, even Nifty is probably going to end the day at the day's highest level at around 10,226 as we see it now. So that's a very strong sign.
It's just before we get to some specific stocks from Mayuresh, just an update that I want to mark. There is the cabinet has approved the increase in carpet area for houses eligible for interest subsidy under that credit link subsidy scheme for the middle income group. So I think the areas have been increased. Carpet area in MIG 1 from 90 square meter to 120, increase in 2 from 110 to 150. So effectively net, I think what this does is buying in that higher carpet linked area and the availability thereof, but the interest subsidy available for those houses as well. So just keep an eye out. There could be some impact that we would have on some of the housing finance companies, but we'll talk about that in a bit.
So HDIL is one which is very strong right now, and also a few stocks that have been moving up in the last few minutes. So we'll have to see how they have done. HDIL is at day's high actually.
Yeah, so let's see. Interesting. Let's wait and watch. But just before we start wrapping up the markets, Mayuresh, maybe a stock idea from you. I know you have two, but let's talk about one stock idea before we wrap up the market. We'll chat about the other one post markets. But if somebody wants to make an investment right now, are there good options? What would be one top option from your end?
So SH Kelkar, Neeraj, is something that I'll continue to prefer. If you look at the industry dynamics, it's a 50 billion rupee industry growing at 10% in the Indian context, and it's highly concentrated among 8 to 9 odd players, and the top 5 actually account for 70%. If you look at SH Kelkar in value terms, it's got almost 13% of the market share. In volume terms, 23 odd percent. There are high entry barriers to this industry as a whole. Customer acquisitions is a very tough ask in this industry. You're probably looking at R&D expenses which remain very, very elevated because you need those patents to come through to have your products getting pushed through to different customers. And again, the regulatory requirement. Again, the number of customers that it caters to both on the fragrances and the flavors side is very diverse. So not more than 5% is what the top customer contributes in terms of top line. And on financials as well, it has been growing its top line at 14%. It is going to be able to compound its growth almost by 16-17 odd percent in my opinion. EBITDA margins remain strong at 17-18 odd percent, almost debt free with a debt equity of 0.1, and you're probably looking at return ratios with ROEs 15, ROCs 20.
Okay, stay on, Mayuresh. So much more to speak about, but 3 minutes left. Let's start wrapping up the markets. On to Pradeep for looking at the large cap pocket. And Pradeep, it's a big bang closing in at the high point of the day.
Definitely, and several analysts have been talking about a level of 10,200, 10,220 odd, and if you look at it, probably we'll get the final closing above that mark. So that's good. A century for Nifty for sure. Nifty Bank also more than a double century, up 250 points. This is the index we talked about yesterday in detail, and we thought it was close to a support. It has really bounced back. Small cap and mid cap also participating with very advanced, very strong advanced decline ratio. Let's look at what's happened to the index stocks. There are more gainers than losers for sure today. Infosys, RIL, SBI, these are some of the heavyweights that have in fact led the market. HDFC, ICICI, L&T, ITC, HUL, these are somewhere in between, not among key gainers but still contributing. Very few losers. In fact, out of 50 stocks we have only 6 closing in red. Maybe it could become 5 in the next few seconds. But Adani Ports is a key loser among heavier stocks. If you look at Coal India is a significant loser, and also two-wheeler pack, Bajaj Auto and Hero Honda. So that's the only segment which is not doing that well.
Some respite for market participants today. The market breadth definitely improved, and there were a lot of gainers in the broader markets. Let me just start off with the stocks which lost yesterday. So the entire Reliance Group stocks, Reliance Communications surged in the second half of the session. As you can see it on your screen towards the end, it closed the day with gains of as much as 19%. And not only Reliance Communication, you also had Reliance Power, Reliance Infra, all the stocks gained in the second half of the session. Besides that, Manappuram Finance was pretty active since the word go in the morning. That stock closed with good amount of gains. It saw a lot of build-up even coming on the future side. And look at that, this stock also closed at day's high with gains of 9%. Page Industries, that's the counter we've been discussing on the show, touched its fresh 52-week high. Good set of numbers also coming by. A lot of long positions also seen for this counter. Page Industries cooling off a bit towards the end, but still closing the day with gains of almost 4%. The mid-cap cement space was pretty active, so Heidelberg touched its fresh 52-week high, and this stock also saw some momentum in the second half of the session. In fact, in just last 1 hour, closing the day with gains of almost 9% for Heidelberg Cement. The liquor stocks were active, so the likes of United Spirits as well as Radico Khaitan gained in today's session. We also touched base with one of the management, and clearly the outlook is looking pretty positive for this sector. Check out Saregama. This stock has gained 3 times on Y2D basis, and once again, I think it closed almost at its lifetime high, 925 for Saregama, up almost 17%. And a stock which gained in the last few sessions, Fortis Healthcare, saw a bit of profit booking coming about. That closed at day's low with cuts of 7%, Neeraj.
It's been a great year for the Sanjeev Goenka group companies, you would have to say. Navneet, Saregama, I mean, if you look at what's CSE's slightly flat today, but First Source is up about 10-11% today as well. Philips Carbon Black has a good year, so that group is doing well. But this is what the markets are doing at close. Contributions coming in from heavyweights, and which is why the index would be up 1%. Reliance, Infosys, State Bank of India, HDFC, when biggies participate, it's difficult for the markets not to do well. And none of the big ones have lost out today. Look at the top contributor on the downside. That's Adani Ports, by no means a heavyweight. It's just that it's down 2.5%, and that's why it's doing this. So don't look at the losing side. It's all about the green today. It's a strong day in the green. And suffice to say, with the global markets doing what they are doing, you have some bit of global support as well. Tomorrow may not be a particularly difficult day, at least at the start. The market breadth positive, not reversing the kind of market breadth adversity that we had yesterday, but 2:1 is a pretty good market breadth to have as well. And quite frankly, the mood in today's session is pretty positive when you have these biggies and the volumes at which we've gone up in the session today. I think the volumes were a bit of a giveaway as well. This is, of course, the picture and a lot of green on the screen, but I just want to bring up the volume picture and just show you there, because at the start of the trading day today, the F&O volumes were substantially higher. At the start of the 2 p.m. show, the F&O volumes were substantially higher. And yep, this is pretty high. Not so much for the cash market, but for the F&O market, the volumes are pretty high. Navneet, substantially high volumes, you would have to say today.
And today was the Bank Nifty weekly options expiry. So on account of that, these are the kind of figures which you usually see on expiry days.
At least in the F&O market, we closed well. Let's see what the day tomorrow brings. But Mayuresh, we were talking about stock recommendations and things that people can buy. You recommended one idea. What about the other one?
So specialty chemicals is something that I continue to like, Neeraj, and out of that, actually Pushkar is something which looks very, very interesting at this point of time. It is India's largest manufacturer of K-acid, and it is forayed into the dyes segment as well. So the forward and the backward integration at a single location unit is going to optimize cost. At the same time, it uses its internal produced steam from the acid plant, and that saves fuel cost. It got its own logistic fleet, and that's the reason it saves on its freight costs. Having said that, I think the kind of top line growth that the company has exhibited of 14%, the management is very, very confident of posting a 30% top line growth in the year to come. So largely you're looking at a top line of anywhere between 400 to 425 odd crores. The margins should sustain at 17% because of the efforts, as I said earlier, being taken by the management. And again, the global situation with Chinese curves, both in terms of emission and effluent discharge, is clearly putting a lot of emphasis in terms of Shri Puskar's volume growth as well as realizations, which should be on the better side. The EBITDA growth has been in excess of 24%. They'll be able to maintain their margins at 17-18%. And again, I think the bottom line growth has been quite stupendous at 43%. Again, from a debt equity perspective, I think it's net cash on the balance sheet, which is very, very rare. And again, the kind of capex that is required and the cash flow from operations, it should suffice his requirements in achieving and bettering those return ratios by at least 300 odd pips over the next year. So I think like Shri Kelkar, very, very interesting stories, niche story. I think it should do well, but investors have to buy this on declines in a staggered way.
Okay, Mayuresh, just one final thought. Some more steam left to this up move that we've had today?
Probably, but again, Neeraj, my own sense is that the markets might consolidate. And what you're probably looking in terms of headwinds, both from crude, it should not sustain, as I said a few days back, because the supply from shale will probably ensure that the capping of prices happens. So I don't see this to be a over worrisome factor for the markets. But what they'll probably look at is the Gujarat elections, which are due in a few weeks' time. Until that point of time, I think the consolidation in the markets might continue. So to put it in other words, I think I'm not expecting a huge correction onto the markets. Any correction which is of a significant nature can be taken to pick up qualitative stocks in the market.
All right, Mayuresh, we leave it at that. No, thanks a lot for joining us today and giving us your views on the markets. Well, it's time for us to slip into a short break on Countdown. Don't go anywhere. We'll be back with more.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Welcome back. You're still watching Countdown with us. Well, some respite coming in for markets today after falling for 3 consecutive sessions. We had a good bounce back coming about. Nifty finally closing the day above that mark of 10,200. Remember, it got some support around its 50-day moving average, and now the next level will be the 20-day moving average, which is just around the levels of 10,300. Well, the volatility also cooled off, and that's the Nifty contribution list on your screen. Infy surged almost 4%, so that contributed the most today, almost 20 points. The other biggies, Reliance Industries, State Bank of India, and also ICICI Bank contributed the most. What capped the moves were Adani Ports, Coal India, BPCL, as well as Ultratech Cement. These were the counters which were down in today's trade. Well, clearly in terms of sectors as well, it was the Nifty PSU banking space which saw a good amount of gains. Most of your constituents there were trading in the green. In fact, your top gainers were stocks like Union Bank, Bank of Baroda, that saw a good amount of gains. Besides that, you also had good gains coming in for Nifty IT. Like Infosys went up, you had a couple of stocks from the mid-cap IT space, Sonata Software, KPIT, all these stocks saw a good amount of gains there. Nifty Realty also surged, and FMCG index also saw a good amount of traction coming back. But a couple of other gainers on Nifty, Bajaj Finance towards the second half of the session saw some buying momentum, so that closed with gains of almost closer to 4%. Aurobindo Pharma was up as much as 2.5%. Reliance we've already mentioned. Stocks like Vedanta, Bharti, Infratel saw good day of trade. On the losing side, you had BPCL, Z Entertainment, Eicher, Asian Paints, Ambuja Cement saw a bit of losses. What were the themes which worked out today was clearly one, the liquor stocks gain from the likes of United Spirits, Radico Khaitan, Global Spirits. All these stocks saw a good amount of gains. United Spirits was up almost 5%. Radico Khaitan was up 15%. Couple of your mid-cap cement counters were active. So stocks like Heidelberg Cement, that gained closer to 8.5%. In fact, the stock also touched its 52-week high. Sanghi Industries, JK Cement, and a couple of other cement stocks were active in today's session. But let's also switch focus and talk about the European markets, which have inched higher today, with CAC and DAX trading with gains of a little over 0.5%. Let's head across to Sandra Kiloff, who joins us from the London studio with the details of what's moving the markets there. Hi, Sandra.
Hi, well, as you were saying, European shares advancing. This is the first time we're seeing gains in 8 sessions following their Asian counterparts higher today. This is that global risk-off mood is easing. The Stock 600, Germany's DAX and CAC 40 all up about 0.5%, while London's FTSE remains flat. Financial services firms, builders really among the biggest gainers across Europe. For instance, British Land rallying more than 2% here in London after reporting a 2.6% rise in net asset value. This really adding to signs that property demand from companies in Britain continues to hold up in the face of Brexit. Meanwhile, if we take a look at currencies, the pound is fluctuating between gains and losses. That's after a report that the EU plans to reject the UK's proposal for a bespoke trade deal. Sterling snapping 2 days of gains after Politico said that Brussels is preparing to offer the UK a limited free trade deal that would risk its status as a financial capital. Meanwhile, the euro trading down, though, 0.1% lower against the greenback. If we take a quick check on fixed income as well, Germany's 10-year yield has gained 1 basis point to 0.39%, while 10-year gilt yields have increased 1 basis point to 1.291%. And in a quick check on commodities, they have stabilized following the biggest 5-day sell-off since early October. WTI and Brent crude both down 0.2%.
Okay, many thanks for that. Thanks for joining and giving us that perspective as well. Let's stick with global voices. Expensive valuations and disappointing earnings are the key concerns for foreign investors, says Jeffrey Dennis of UBS. However, he remains bullish on India in the long term and says it's the best long-term growth story in a conversation with us earlier.
I suspect that the Middle Eastern tensions themselves would probably not have a great direct effect on the emerging markets. Obviously, there is a scope for more conflict in the region. I'm not an expert on the region, of course, and yet we've had conflict in the Middle East, off and on pretty much for the last 6 years since the so-called Arab Spring. But you're right, I think, to focus on the risk to oil prices and what that could do in terms of the impact on emerging markets. Now, our view has been for a long time that rising oil prices tend to be a positive for EM equities as long as the oil price increase is driven by demand factors. Now, clearly with the change in Saudi Arabia recently, there have been some concerns about oil prices that supplies might be restricted. And so were to see another spike in oil prices based on concerns over supply, I think that would be a negative for the asset class overall. But the best bet here is that oil prices will start to subside a little bit here into the high 50s, and that risk, I think, will subside with it.
Okay. Yeah, so let's wait and monitor the situation. And I think, that's probably the best thing to do. Jeffrey, what about your view on India? Because for the longest time that I remember, at least the last 6 odd months, you have been bullish on India. It probably is, if I'm not wrong, or it probably was amongst your top overweight positions in the emerging market. Does that still stand true? And is that the theme at the conference as well today that you would be telling your clients?
Yes, I mean, we still have an overweight in India within our emerging market portfolio, and so we will be talking about that to investors. Now, I think India is a good deal more complicated at the moment. I mean, the positive side is, of course, the market's had a very good year. It's outperformed in perhaps a year when investors might not have expected that to happen. We think that's got a lot to do with the money that's come into the market locally from players in the local economy who've been put off the property sector, for example, by the impact of demonetization in India. And of course, you've had the slowdown in the economy in the current fiscal year, which is causing some uncertainty about what the growth story will be like in India for the long term. Now, our view is that the economy will recover to over 7% growth in fiscal 2019. We therefore think it's right to be long-term overweight in India. But I think the challenges in the short term are quite clear, which is that the market's very expensive. Earnings growth has been somewhat disappointing compared to the momentum of earnings growth elsewhere within the emerging markets. I think it is worth pointing out as well, however, that while India has been a consensus overweight for emerging market investors for several years, that overweight seems to have come down. And so I think a fair amount of foreign money has already come out of the Indian market, offset, of course, by the inflows, the increased inflows from domestic investors. So I think the short-term outlook is somewhat uncertain, but we still believe that India long-term is the best growth story within the emerging markets, and we would retain an overweight in the equity market for the long term.
My question to you is, and I know it's difficult to either time the market or judge the extent of fall that could come in as well, but since you brought out valuations, I'm picking that point up. At the current levels where we are at, we might be trading at anywhere between 90 to 22 times, depending on what metrics or what earnings estimates every individual house has. What extent of fall or what extent of a minor correction would make India a comfortable, I'm not saying using the word cheap, a comfortable market to start investing back again into?
Well, we certainly think India is trading at about the 96th, 97th percentile in terms of its valuations today compared to history. So it is unquestionably stretched. And it's worthwhile pointing out as well that valuations are high across the emerging markets, but elsewhere in EM, you've seen much better earnings performance relative to expectations than you've seen in India. Whereas our Indian strategist has commented regularly this year, you've seen earnings being a little disappointing. Now, I actually don't think it makes a lot of sense necessarily to say, look, if you see India go down 10%, 15%, it becomes a value opportunity, because to a great extent, I think the Indian market will be driven by global events. And global events, of course, in EM have been very uneven suddenly over the last couple of months. Some of the riskier markets elsewhere in EM, such as in Latin America and EMEA, have pulled back significantly because currencies have been weak. Whereas, of course, in Asia, particularly in China and Korea, Taiwan, where the tech cycle has been very strong, the markets have done relatively well. So I think the best answer to say is that while we are always worried about currency risk and the rupee's come down a little bit, we don't think the rupee is particularly vulnerable at this level, frankly, having seen it come down through the 65 level. And as long as global markets in emerging markets generally do not pull back sharply from here, and we don't think they will do, I think the Indian market will hold in relatively well. But if the question is, where do you have to go down to hit fair value, if you like, in India? Well, it could be 20% lower than we are today. But frankly, I don't think that's a realistic expectation, because India will be driven as ever by global events as much as by events at home.
Well, that's the global perspective on Indian markets. And Bank of Baroda's management is confident of the bank's growth story going ahead. The bank's executive director, A.K. Garg, told Bloomberg Quint that the bank would need growth capital going ahead and may consider doing the same in this fiscal itself.
Overall, the growth story will continue, and we are very, sensitive to that. The issue is we have no decisive say in all those cases, and we are to fall in line with the view taken by the GLF and the leader. As regards the haircut is concerned, one good thing for Baroda is that we have already, if you see in our PCR, we have already provided significantly in all these cases. So whatever haircut comes about, which is a consensus decision, I think it will be easier for the bank to, take a call on those cases, what basis. We are quite hopeful that some resolution will definitely happen, which will be, overall good for the banks. We definitely need capital for growth. And for that, the management already have a mandate from the board, and about 6,000 CET and about 3,000 crores 81, out of which 1,350 crore has been raised by the bank out of 81. And bank is ready to raise capital. And the issue is that we are in the whole process, whereby we can take a call, could be within this financial year itself, to go ahead with our plans to raise capital.
All right, moving on. CARE Ratings posted a muted second quarter. The management, however, sounded optimistic that the scenario will improve once India's macro fundamentals get back on track. Listen in to what the management had to say.
Even if the interest rates are marginally higher than what was a few weeks back, that doesn't mean the fixed capital formation will undergo a change. And I don't see a substantial change in the outlook for ratings or offtake for credit in any way changing. If you see, the transition effects of GST are beginning to ease, and that will mean that the fundamentals of companies starts improving, the profits start improving, and the consumption cycle story is still intact. That means that capex formation will start increasing as we go forward, and that means I don't see that there is not much of a negative impact as a result of this marginal uptick in the yields which is taking place in the GSEC market. The growth rates of rating agencies has been somewhere around 7-8 kind of % on an overall basis. That is reasonable considering the kind of macro parameters which are there. If they start improving, I would like to believe that the growth rates of rating agencies like CARE will also start improving. Going forward, I think the way we approach the market is completely driven by how we get our analytical rigor right, our analytical forecasting right, and see how our research and our knowledge helps the markets have a better understanding of credit risk. And that, I think, is a completely crucial focus as a rating agency, so that we win the confidence of investors, the issuers, and the general market participants using our analytical rigor and knowledge on the subject.
Okay, distribution has been ITC's strength. That's the word coming in from Hemant Malik. He's Chief Executive Officer for the Foods Division at ITC. At the launch of the premium chocolate brand for Bell, Bloomberg Quint Charlene D'Souza caught up with him to get his view on the company's plans with regards to targeted revenues from the food segment.
The foods business is an important business for ITC. There is a huge amount of focus. We have playing in many different categories. I think 3 of our brands are more than 1,000 crore. The 4th should be reaching 1,000 crore size very shortly. We have, I think we have now become the 3rd largest packaged food business, and we are very proud of that. That is not it's in a very short period of time. The expectation from the organization is that we should grow faster than the competition, and it's my job and my team's job to deliver on that expectation, and we are making sure that our strategies are right to make that happen. In the long term, ITC has talked about 100,000 crore from other FMCG business, and ITC Foods, being the largest other FMCG business, has to make sure it contributes rightfully in that space.
Okay, you've also gone into vegetables and shrimps, and those are the other areas that you're looking into. So, what is your distribution strategy there, and how are you planning to move ahead with these products?
I think I believe that for ITC, distribution has been our strength. That has been one of the pillars which encouraged our chairman to think of moving into the FMCG space. Having said that, we have evolved our distribution over the years. From a very convenience-focused distribution, we have expanded to make sure that we can service all kinds of channels. We have a very clear channel strategy and in terms of how we need to service each of the channels. New channels are also coming up. E-commerce is an important channel. Frozen foods is a channel which is new for us. But I think the principles of distribution remain the same. So we build our competencies in these spaces, and with the same principles. I think that's not an area that really gives me sleepless nights.
Online transactions may become even more attractive. A government official told Bloomberg Quint that online payments may attract a discount of up to 2% or 100 rupees, whichever is lower. This move is expected to help boost online transactions and cut down on cash transaction. Nikunj Ohri gets all the details in this report.
the government is considering to give 2% concession on GST made on B2C transactions with a ceiling of ₹100. According to the proposal laid by the government, there would be two prices for consumers, one with a tax concession for online payments, while the effective GST rate for cash payments. According to this, however, this concession will not be available for dealers who avail the composition scheme. According to the study done by the government, if the average size of transactions, the average value of transactions that took place in 2016-17 was rupees 1800, and if 20% of 20% of this 20% of those who make payments online avail this concession, the revenue implication of this would be around 13,000 crore rupees. The proposal could not be taken up in the recent GST Council's meeting, but is likely to be taken up in next GST Council's meeting. According to a tax expert, the government will have to put out a clear mechanism as to how this concession would be given, whether it will be through a cashback mechanism or suppliers will have to maintain two tax rates, one for those who make online payments, while another for cash payments.
Well, moving on, with pollution levels in the capital as high as they are, the Delhi Half Marathon has come under intense scrutiny. Well, the Indian Medical Association has urged the organizers to call off the event, citing a health hazard. So, is the Delhi Half Marathon the world's most dangerous race? Here's a special report.
43 of the world top 100 ranked athletes from 39 countries.
Marathons are all about pushing your body to the limit. But in the capital city of New Delhi, that takes on an entirely new meaning.
I was like, let me just go for a run, it won't do me much harm. But then within like 15-20 minutes, I had a red nose. I was panting heavily, and I'm a person who has no breathing problems, let me tell you that.
Runners like Tanmay have been preparing for the city's most popular race, a half marathon that attracts everyone from local enthusiasts to Olympic athletes.
Now you slightly lift your hip up off the ground.
While Delhi remains covered in a toxic smog, runners continue to train, some with their faces covered. But just how bad is it? Smoke two packs of cigarettes, and then some. According to the Indian Medical Association, that's the impact Delhi's air will have on your lungs in one day.
The runners would like to run because they don't know, they are not doctors. The effects of pollution will not come in one day. They are not interested, they are not bothered about what is going to happen to them after 10 years.
That's Dr. K.K. Agarwal, the National President for the Indian Medical Association. He says running in these conditions is not just harmful, it's potentially fatal.
2 years back at Beijing, 6 marathon runners have developed a heart attack.
Tanmay has been a regular at Delhi marathons. He's heeded IMA's advice and dropped out this year. Others refuse to throw in the towel, hoping things will take a turn for the better.
The fact of the matter is pollution is there for last week. It has really been high, and which we all understand because of all the smog which is happening. But now it is settling down, so we will also go with it.
So we will run?
Yeah, definitely. We will run ADHM for sure.
For runners who have been training year-round, pulling out days before the event is not an option.
If you follow the doctors, yes, you should not go. But if you follow your own passion, and if you look at it your self-confidence, because we were training ourselves throughout the year, so the inside voice is saying that I think we should go and participate.
I'm hoping the fact that I'm a little fitter and that I think my breathing is better will help counteract. I mean, I hope that's right.
Dr. Arvind Kumar, a leading chest surgeon, says when it comes to running through the toxic smog, being fitter is of little consequence.
Now, people who have been training, I don't argue that they have been training. They have trained themselves physically, muscle fitness wise. But their lungs are same. You cannot train your lungs to not accept the pollutant that is presented to it. I don't think that kind of training is possible.
The IMA has repeatedly asked for the event to be cancelled, saying it puts an entire community at risk. Airtel, the main sponsor, has threatened to drop the event next year if Delhi's pollution problems are not addressed. The promoter of the race insists the health concerns are short-sighted, piggybacking on a Supreme Court decision which said runners have a fundamental right to run. So, the IMA is making one last-ditch effort it's hoping the courts will intervene and at the very least postpone the event.
Okay then, because of this, the three of us will not go and run the Delhi Marathon.
I was not planning to, in fact, Mayuresh.
Yes, but with that, it's a wrap on this leg of Countdown, at least, from Pradeep, Navneet and me, Neeraj. Thanks so much for watching.
Are we live?